Hello everybody, my name is Nicole. I'm a technical analyst and private investor. And once again, I've chosen three interesting charts for you this week. And I've decided to focus on US indices because the media got terribly excited yesterday when the S&P hit a new record high and a new daily closing all-time high. And it was testament to how great the economy was, or whatever. It just depends what kind of slant you want to put on it. And it's just fabrication, quite frankly. So my first chart is a daily chart of the S&P 500 index. And this is the one that got the most media attention because it's the one that has at last reached, matched, and exceeded the record high that we had in February this year. Now, to give you some idea, the record high was 3399 yesterday, whereas it was 3393 on the 19th of February. Now, by my reckoning, 6 pips is not something worth writing about. I mean, it's just irrelevant. And as you can see on this chart, the daily ranges have been minute over the last 3 weeks, 4 weeks or so. I mean, it's just ridiculous. This is not a market that's actually moving anywhere very far or very fast. The bottom of the chart, I've plotted the relative strength index. This is the index relative to itself, not relative to anything else. It's a technical analysis measure of whether the market is overbought and oversold. And once again, you can see this week we are overbought, because we're trading at 70. Not quite as overbought as we were at the beginning of June, mind you, but look what happened then. So I'm not saying that this is a top or anything like that. I'm just saying that there's so much media hype going on here that I'd be very wary and careful who you listen to. My second chart is a weekly one of the Dow Jones Industrial Average. And what you can see here is a total lack of progress since the beginning of 2018. I've marked a sort of horizontal band, a channel within which it's held for most of the time. And you can see at the upside, it's about 27,000. And then on the downside, it's about 22,000. So, I mean, progress is minimal. Underneath, I've plotted momentum. And as you can see, momentum, bullish momentum, has been sadly lacking for the previous 2 years. And this year, we had a lot of bearish momentum through to March, and bullish momentum only kicked in June. And now it's below where it was. Look at the cloud capped earlier on in the summer. It might be capping again, and we're not at all-time highs. My final chart is that of the NASDAQ, and it's a monthly chart. Now, this one I've done a very, very narrow uptrend channel from 2016, and you can see the massive difference between not just the size of the candles, but the deviation from that channel this year. I mean, it really is a really very, very different year. And I believe because it's so different, it's potentially unsustainable. Below, I've plotted volume, where you can see current volumes in the last 5 months of rallying are about half the volume on the month of March. So you can see this is a very crowded trade with a lot of rather scared bulls. I would urge extreme caution here. That's all for you today. I wish you good luck, and please tread carefully.